Hey traders, it's John Fortune here with this week's weekly Forex forecast. Hope everybody's having a great weekend. Last week we had some very important data points out which point towards a near-term bottom in the dollar. However, we did have quite a weak close, so there may be a little bit more chop to go in the dollar before it finds a true bottom. But coming up next week, we have a number of interest rate decisions, including from the US, Europe and Australia. And in today's video, we're going to look at my plan for trading a number of those interest rate decisions next week. Okay, so let's have a quick look at the economic calendar before we look at the markets, and also before we look at the coming week where we have a number of interest rate decisions. It's going to be a big week in markets this week. I just want to point towards two things that happened last week which are indicative of a fundamental bottom in the dollar. And the first was the GDP data that came out, much worse than expected and also previous. And when we look on a year-over-year basis at US GDP, over the last 2 quarters, we are in an area of the data which is supportive of a bottom in the dollar. Why? Because with the US dollar, what you tend to see is it tends to behave or respond to economic data essentially like this. So when economic data is, or the economy, if you're looking at this and it's very, very strong and the economy is overheating, you see the dollar rallying like we saw when the Fed was raising interest rates and we had very, very strong inflation coming out. And conversely, when economic data is very bad, you also see the dollar strengthening. And when you have kind of disinflation, which is what we've been seeing as the dollar's corrected, that's when you kind of enter this middle ground where the dollar tends to underperform. You see the dollar being weaker. So the GDP print, we are starting to get into those realms of negative data where you begin to see a flight to safety, especially in the dollar based on US GDP. So that was the first thing to note. Bear in mind, it wasn't just last quarter, which was reported here. The quarter before that was also in the realms of safe haven and a flight to safety. And we actually did see the US dollar bottom. It rallied and then it came back and retested the bottom. We've seen another GDP print consistent with more of a flight to safety. So fundamentally, we're not talking technically, fundamentally, that was a very strong reason that we could be seeing inflows into the dollar into the near term, in the coming quarter over the next couple of months. And the second thing, very important, was the BOJ, which on Friday disappointed, although personally it wasn't a surprise to me, but they disappointed many speculators by stating they're going to continue with yield curve control and their policy review could actually take 1 to 1.5 years. Now, what this means is when we go and look at the charts, you will see when they initially intervened, and by they I mean the BOJ, they intervened to strengthen the yen, and then they also adjusted their yield curve control slightly. This was one of the big drivers of flows from the dollar, out of the dollar. The dollar actually peaked into the yen, and we saw the yen bottom like this. Well, now we have the opposite as of Friday. We have the yen potentially going back down to the lows. And this again, as we see money coming out of the yen, based on this disappointment from the BOJ about the scrapping or adjusting of their yield curve control program. This is another fundamental reason why we could be seeing over the next few months a bottom in the dollar and money coming into the dollar. So two very big fundamental pieces of data last week which are supportive of a dollar bottom in progress. Now, we may not have seen the absolute tick low, but we should be looking at this fundamentally now to say there's a very good chance the dollar is in the process of forming a bottom. Okay, so with that in mind, let's have a quick look at the coming week. And the first thing to note is we have some bank holidays on the Monday, so we may actually see May Day in the UK, that the market's a bit slow on the Monday. Coming into Tuesday, we have the Australian interest rate decision, and these are always good because they happen so early in the week that you very often get the chance to trade any follow through in those markets. So we will be looking at Aussie pairs. I do like Aussie shorts especially. And we also have, as you can see on Wednesday, FOMC, where the Fed are expected to raise 25 basis points. And based on the inflation data that came out last week, it does look like they are in fact going to go 25 basis points. And we also have on Thursday, the ECB, and on Friday, non-farm payroll. So a huge week next week. and it is going to be a tricky week. However, there should also be opportunities coming up, and we're going to look at this. The one which may be slightly more difficult are the euro pairs next week, because we get this on a Thursday. Unlike the Aussie interest rate decision, any kind of move, after this or off the back of this is probably going to lead towards opportunities next week as opposed to this week, because it's so further down in the weekly schedule. So big week coming up next week, but with volatility often also comes opportunity. Okay, so let's have a look at the scores for the coming week, and you can see there's quite a lot going on here in the scorecards. The US dollar has actually strengthened, and the probabilities of the dollar actually going down versus many of the majors here, they have actually diminished. So this is also supportive, although the scorecards, are not taking into account, the BOJ policy necessarily, is supportive of this idea that at the very least, even though we should be bearish to neutral on the dollar still over the next 1 to 4 weeks, that the sell-off in the dollar is at the very least running out of steam. And this is pointing towards the probabilities over the next 1 to 4 weeks of the dollar continuing lower. They are there, but they're not as strong as they were previously. And again, this is supportive of a currency which is actually in the process of bottoming. And again, it doesn't mean we've seen necessarily the low tick. Maybe we come down, test the lows again next week, and then we start to reverse, in a couple of weeks' time. But it is supportive of this idea that the dollar really is now starting to run out of road to the downside. We do have FOMC, and it's important to note that the interest rate decisions we have coming up, they can change the scores if they get very volatile. And the problem with that is it does mean when we have interest rate decisions, yes, the scorecards are here most of the time to be predictive, to try and point towards, on a 1 to 4 week basis, the highest probability setups. However, with interest rate decisions, generally speaking, you're going to be better off being reactive, waiting for the interest rate decision to come out, because generally before the interest rate decision, the market will just chop around, do nothing. And then after the interest rate decision comes out, you can look for those setups in those markets. So the first thing to note is the dollar is in the scorecards strengthening. Although it's not bullish in the scorecards, it is actually not as bearish as it was before. So again, supportive of a near-term bottom. And we also have the Swiss franc coming off of +4 for the first time. Now, when markets do this, they tend to, in this case, form a near-term top. So the difficulty here is, although we don't have Swiss franc interest rate decision next week, this would have been a great one to be long. And actually last week, this was one of the best. In fact, this was the best setup highlighted, and the Swiss franc pairs really did, sell off. Aussie franc, CAD franc, New Zealand franc, all of those markets you could have shorted last week. These were good trades. But coming into this week, it's not as attractive, and we could be seeing a near-term top in the Swiss franc. It doesn't mean a major reversal, but over the next 1 to 4 weeks, we could just see the Swiss franc chop, pause before it heads higher again. So unfortunately, that takes the Swiss franc. We will look at them, but it's not as good as it was last week. The pound really is the standout currency here this week. Why? Because we have a currency which is strong and getting stronger in the scorecards. And we also don't have the exposure to the interest rate decision. So definitely pound longs I am interested in as my top play this week. We're going to look at pound yen. That is my favorite pair next week. We're also going to look at pound Aussie. And we'll also look at pound dollar and pound CAD, but these will be based, US dollar after FOMC. And the Japanese yen, as you can see, it is weak and getting weaker in the scorecards. And what that means is that this is actually, alongside pound longs, yen shorts are my other favorite market going into next week. Now, the third theme that I really like next week, because as you can see, the dollar is weak but getting stronger. The euro is strong but getting weaker in the scorecards. The franc is strong but getting weaker. And the New Zealand is weak but getting stronger. So we really want to be focused on those currencies which are bullish, and their 4-week rolling probability score is also getting stronger. So the probabilities of that currency continuing to trend is going up. And we see that in these three currencies, in the pound to the upside, yen to the downside, and also the Aussie. But don't forget we have the Aussie interest rate decision. So after pound longs and yen shorts, my third favorite theme for next week are Aussie shorts and it's going to be after that interest rate decision on Tuesday that I'll primarily be looking for those shorts in Aussie. Okay, so let's have a look at the individual currencies before moving on to the markets themselves. Starting with the dollar, you can see over in this area, this was where we had the BOJ intervention. We'll look at this in the yen as well. And once we got the intervention in the Japanese yen to strengthen it, this was one of the catalysts, as I was saying earlier, to drive this sell-off in the dollar. There were two catalysts. One was the strengthening of the yen and the BOJ policy, which attracted money out of the dollar into the yen. That catalyst, which caused the sell-off in the dollar, or this correction, is now reversing or has been kicked into the long grass. So again, that reversal of this catalyst is the catalyst for a potential bottom. And at the same time, over in this area, if you remember, this was where we actually went from very, very strong overheating in the economy to disinflation, and that pushed the dollar back into this area. And that was where we saw the sell-off. And now we're starting to see the data coming out. It's not really deep in this territory where, you know, you would expect a panic flight to safety, you know, with negative GDP, for example. But we are starting to cross into this territory. That's where the recent GDP prints have put us. So again, fundamentally, you would expect to see this, you know, result in a strengthening of the dollar. And that's really been the case over here. So over here, since we tested the lows and we had the Q4 GDP print, the fundamentals have been pointing, look, to potentially we're going to see a bottom in the dollar. Now we've got the yen catalyst as well. And if you overlay the scores onto this, what we're seeing in the scores is, if you're looking at a trend in the scores, it's essentially doing this. So the scores are now telling us, you know, it's not quite bullish. We shouldn't be outright bullish on the dollar just yet, but we are running out of steam to the downside in the probabilities, and therefore, you know, all of these things combined. Yes, we did have one thing I will note is we did have a weak close at the end of the month last, just gone yesterday. So that is not something that I would look and say, yes, we're going to see an explosion of the dollar this week. We may even come down still and test the 100.39, and then that could be over subsequent weeks the actual bottom. And again, that wouldn't change the fact that, you know, even though we're testing the lows or we come down back below this low, that doesn't necessarily mean, you know, this is not a bottom. A bottom is a process. It takes time. And we could very well see, you know, momentum lacking. When we go and look at the euro, which is essentially the inverse of this, you know, you might see that a little bit clearer, where that push to the upside is running out of steam, and this sell-off here is also really running out of steam. We're lacking momentum every time we test the lows. So not outright bullish in the dollar, but I do think we're in the process of forming a bottom. Next is the euro. We do still have some relative strength, and I do like the euro pairs. The problem with the euro pairs next week is I would really like to trade them before the interest rate decision and be out by the interest rate decision. Why? Because before the interest rate decision, maybe we get an opportunity in EurAusd, for example, maybe Euro Yen. But once we get the interest rate decision on Thursday, you know, we only really have one additional trading day. So any kind of follow-through move from the euro interest rate decision is probably going to be something for next week now. But you can see in the euro, here's the previous high, and we are really lacking momentum. Every time we test these highs, we fail. So there's nothing to say that this has reversed. As you can see, we're still pushing higher. And there's nothing to say that we are not necessarily going to come up and test the high once again. Maybe we test the high a couple of times. But the overall kind of fundamentals of what we discussed in the dollar, if we are going to get a bottom, it is also pointing towards the euro starting to roll over again. So we're in this area where the euro is bullish, but it's running out of steam. And that's actually usually one of the hardest situations to trade something in, is, you know, when it's bullish, but it's running out of steam, you know, it's really a kind of book profits scenario. It's not get long or get short. It's kind of, if you were long, book profits. So that's what we're seeing. And I do think this is going to, as I've been saying to you, turn into a kind of a double top over here, but we may not be done testing the highs just yet. Next is the pound. Now the pound is actually breaking out of this pattern here, and this actually is a major breakout in the pound. There's no doubt about that this is a major breakout, and we continue. We had a strong close here as well, which does tell me we may still have some more upside. And even if we push higher, you know, even if we start to break a bit higher, I do think that this is going to ultimately fail back down below this level, and that is going to see the market heading lower, as I've been saying to you in these videos all year. However, right now, going into next week, we do still, that's the bigger picture. We are trading this to the upside. So I do like the pound as the best long going into next week. Next is the Swiss franc. I've been highlighting Swiss franc long plays ever since the beginning of the year. I said Swiss franc was my favorite long overall. And again, last week, there were really good opportunities to the downside, Aussie franc, CAD franc, New Zealand franc, etc. And the problem is we have actually started to stall out up in this area. And the scorecards, which again, don't forget, we haven't seen a reversal in the Swiss franc yet. This is making higher highs and higher lows. But the scorecards are designed to be predictive. They're not a crystal ball. They can't predict things 100% of the time. But what they're telling us is that this rally is running out of steam, and actually that tends to precede correction. So that is the problem with the Swiss franc as well. We're bullish, but we're running out of steam in terms of the probabilities of continuing higher. And therefore, it's, again, more of a book profits kind of signal as opposed to get long or get short. So I wouldn't want to short the Swiss franc, but if you are long, especially from down in this area, you may want to consider booking some of your profits on those trades. Next is the yen. You can see the yen has sold off of that BOJ, and I think coming down to this low over here is quite a high probability next week. So any pullback in this market down to at least the low, and I think that this could actually even be coming back down to the low overall, and that again is going to help the dollar bottom. But next week, immediately, this would be the move I'd be looking for. And I do think, based on the fact that we don't have the interest rate decision now, we've had that passed, this follow through from the BOJ on Friday is really one of the key places we can look to make money next week. Next is the CAD. The CAD is chopping around, but as you can see, we are forming now potential head and shoulders. So I do think we get some near-term strength in the CAD, but this could very easily just turn into a right shoulder. So near-term, kind of bearish to neutral on the CAD. I think there are better shorts, especially Aussie after the interest rate decision, and definitely the yen. But the CAD, kind of bearish to neutral on. So nothing going into this week that really jumps out to me in terms of the CAD. Next is the Aussie. We did have quite a significant breakdown in the Aussie. This is actually a confirmed double top in the daily, and this is a double top within a bigger bear flag. And in fact, you can see this is even setting up as a lower high over here. So I do favor further declines. However, you can see in the breakout down here, this is essentially setting up as a one wave because it's consolidation. There's your high and there's your one. So any pullback in this area next week, especially what I'm going to be looking for is we consolidate into the interest rate decision on Tuesday, and then we get the sell-off. That's really what I'm looking for in the Aussie, and we're going to be prepared to look for Aussie shorts based off of that after the interest rate decision on Tuesday. And finally, the New Zealand dollar. We have broken out of this kind of bear flag, but we are seeing a little bit near-term strength. Maybe we're going to consolidate and chop a bit more. And again, this is a kind of a book profits opportunity in the New Zealand because in the scorecards we are bearish, but the scores are actually increasing. So you see that again, usually before a correction or chop. So bearish to neutral going into next week on New Zealand dollar. Okay, so let's have a look at the markets themselves, starting with crude oil. Now, last week, we did come down and we took out the target area highlighted, this max profit taking zone, where if you trade into these, so looking for shorts last week, although I don't have and did not have a very strong bias on this market, any shorts in this market, this would be the opportunity to book profits. Why? Because the odds start to turn against you for further declines once you get to this area. Now, if you are shorting this, doesn't mean you have to hold all the way to here or that the market will necessarily get here in the week. But if it does, that is your sign to start to look to book profits if you want to do that with the odds on your side. Going into this week, again, I do not have a strong bias on crude oil. We are starting to strengthen. I'm neutral on this overall. On balance, I would favor a move back up to the 81 area. But again, I think there are better markets to trade next week in all honesty. So the first Forex pair here is pound yen, and this is my favorite market next week highlighted in gold. We have a really big breakout here and very, very strong momentum. So what I would like to see here is any correction in this market, I would be looking for potential long opportunities. And if we can get all the way up to the 173.50 area, this would be the max profit taking opportunity where the odds for further upside next week start to turn against you. Next is pound CAD. We did come up and take out the target area last week, and you can see this was where this market ended up pausing last week. Going into this week, any correction or consolidation in this market is viewed as an opportunity to look for bullish reversals. I'm going to be looking up towards the 1.7175 area. Next is Pound Aussie. Now, this was a market that really did trade through the max profit taking area last week. And this is a sign of real strength because not often does it happen. Usually 3 times out of 10, roughly, you will see this. Most of the time, it will pause in these areas. So going into this week, once again, this is a market I'm looking for further upside. However, now we're looking at the Aussie pairs here. Just bear in mind, these next 3 pairs are for Aussie weakness from the interest rate decision. So any pullback in this market into the interest rate decision, look for a break higher. Potentially on the interest rate decision itself, you get that momentum, and then any pullback is the second chance to get involved up towards the 1.92 area. If we have a bullish Aussie catalyst, let's say they come out unexpectedly raise rates or something like this, which I don't anticipate, but if they did, then I wouldn't necessarily be looking to trade these ones. We can look at the Aussie yen setup instead. Next is EurAusd, another really nice market to the upside, which took out and actually traded through its max profit taking area. Coming into this week, it does look like we're forming a bull flag, and because the euro interest rate decision is later on in the week, there is a good chance you get the opportunity from the Australian interest rate decision. If you start to break higher, that's the opportunity I'd look for into the 1.6850 area. And the final Aussie pair based on Australian dollar weakness, although we will look at it versus the US dollar, but that will be after FOMC, is Aussie franc. This was the market highlight to the downside, and we did trade into the max profit zone. You can see we bounced from here. So this was an optimal place to book profits on any shorts in Aussie franc. Coming into this week, we are starting to consolidate. So what I want to see is this pulling back into the interest rate decision. And if we get that opportunity to short after the interest rate decision comes out, and that could be one of 2 things. Either we get a bearish catalyst on the Aussie, or we might actually just have pretty much a nothing event. In which case, this is supportive of the opportunity to get short once again in the Australian dollar, back down to the prior lows, down to roughly the 0.5840 area. And the final Aussie pair that I'm looking at after the interest rate decision on Tuesday is Aussie yen. Now, Aussie yen is really a plan B. This is something you can look at if we get unexpectedly, so I'm not expecting to trade this next week, but if we unexpectedly get a strong Aussie and these 3 markets here are negated, so we don't have the opportunity to trade them because the Aussie is unexpectedly strong or we get an unexpected hawkish or bullish catalyst, then what I would be looking for is I'd be looking for the Aussie to the upside versus the yen. So that breakout, if we get the opposite of what we're expecting, which is a weaker Aussie, that would be the opportunity to kind of reverse that setup and trade a stronger Aussie versus a weaker currency into the 91.50 area. Okay, so moving on to the dollar pairs, and I'm going to be looking at these primarily from Wednesday onwards, so after FOMC. And the first 2 markets here are based on dollar weakness. And it isn't dollar weakness that I'm anticipating. What I'm actually anticipating is US dollar strength. I do think we could see the US dollar strengthening from Wednesday. So I do favor US dollar yen to the upside and Aussie dollar to the downside. Those are my 2 favorite setups post FOMC, highlighted in blue to show you that there's a news event attached to these. But if we get a weaker dollar, then pound dollar would be the opportunity I would be looking at. So any kind of consolidation, and then we get a weaker dollar from FOMC, this is the market I would be interested in, and I'd be looking up towards the 1.270 area. So again, we consolidate because the market probably does nothing into Wednesday. Then we get a spike on FOMC, which is dollar weakness. Then you get a consolidation. This kind of follow-through trade here is what I'd be interested in this market. Next is euro dollar. Now, with dollar weakness, you could look at euro dollar, but I've put this in light blue because I don't think this is a great opportunity to trade this market next week. Why? Because it's probably not going to do anything until Wednesday. Then we have FOMC, and even if you got a weak dollar, the problem is the very next day you have ECB. So you've got 2 interest rate decisions, Wednesday and Thursday, and this pair could get very choppy and volatile. So on balance, I am looking for this to potentially come into the 1.1150 if we get a weaker dollar. But I just think there's too much risk event attached to this market to really try and predict where this is going to go next week. Okay, so the next 2 pairs are based on dollar strength from FOMC, and this is what I ideally would like to see next week. Any pullback into FOMC and then a break lower on FOMC, look for a follow through from Wednesday in Aussie dollar down to the 0.65200. And my second favorite FOMC pair is US dollar yen. if we pull back, I'd look to see this pulling back into Wednesday. Look at this really nice breakout with momentum in US dollar yen. This is telling us we should be looking at this to the upside. Were it not for the interest rate decision, this would be a fantastic opportunity next week. But it may still be the case that this is a fantastic opportunity, just that we have to play it around the interest rate decision. So any pullback in this market, I would be looking for a break higher on FOMC from Wednesday. And then Wednesday, Thursday, Friday, I'd be looking for this move up to the 138 area. And the final pairs we're going to look at here are yen short plays going into next week. So they're not as good as some of the other ones we looked at because we do have the interest rate decision on Thursday out of the ECB, and the Swiss franc is potentially peaking. But these are markets you can also look at. So any pullback before Thursday, I would be looking at this for bullish opportunities into the 152 area. And the final pair here is franc yen. Now, the good thing about franc yen is we don't have the risk event associated with some of these other markets. However, the Swiss franc is peaking in the scorecards, but the yen is such a good short, in my opinion, over the next couple of weeks that we may still see the Swiss franc outperforming, even if it does correct off the highs somewhat. So we have this strong momentum. Any pullback, I'm looking for this to form a bull flag. And just like the other pairs, I'm going to be looking for potential opportunities. And you don't have to trade all of these. You know, if you get a good opportunity in pound yen, maybe in US dollar yen to the upside after FOMC, you don't have to trade these other ones. So we're not looking at trading all these markets. This is a watch list to try and find a handful of good trades next week. So any pullback in franc yen, I am looking for this to rally into the 154 area. Okay, so wrapping up the video with gold, silver, and Bitcoin, starting with the gold-silver ratio. The great thing about this is you can see both gold and silver denominated in dollars. We have a discrepancy here where gold is underperforming silver, and this has been the case. And with FOMC and the dollar likely to dictate moves in these markets here next week, I do think this sets up a great opportunity to play this either way. So I'm going to be looking at, if we get a weak dollar from FOMC on Wednesday, I'm going to be looking for silver longs. And if we get a strong dollar from FOMC on Wednesday, I'd prefer to look at gold shorts. So starting with gold, if we consolidate into Wednesday and then we get a stronger dollar from FOMC, this would be the opportunity I'm looking at in gold, down to the 1940 area. Next is silver. Now, silver is setting up really nicely to the upside. So if we get that bullish catalyst for silver, which would be a weaker dollar from FOMC, I would look for this to break higher, and then any pullback would be viewed as the opportunity to look for longs into the prior high up at the 26.25 area. And last but not least, we have Bitcoin. Now, Bitcoin traded into the max profit taking area highlighted last week. Coming into this week, I do on balance favor Bitcoin to the upside, but again, I would really want to see a weakening of the dollar from FOMC on Wednesday. So if we get a weakening of the dollar and Bitcoin breaks out, you could look up towards the 31,600 area in Bitcoin. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.